So welcome everyone to the Access to Finance Expo series at the Chamber of Commerce. There's only a few of us, as we said on the call, so it's more quality over quantity. So normally I'd say we'll mute everybody, and if you want to ask a question, put your hands up. But if you want to actually just, because there's a relatively small amount on the call, if you've got a question you just want to interrupt, please do. Just unmute yourself and ask the question. Or if you want to ask a question but don't want it to come from you, then send it to me privately in the chat, and I'll ask it on your behalf without using your name. As you probably heard me say just now, then have your elevator pitch, because if you're going to ask a question, you should definitely say a bit about yourself and your organisation, which will not only give the speakers a chance to put their response into perspective, and give it a leaning towards what you're doing, but also it will enable you to sell your business a bit and network. If you want to use social media, please do use the hashtag Finance Expo series. That would be much appreciated. And before I give my update from British Chambers, I should just say thank you to Skills Launchpad for sponsoring these events. And also to our patrons. So the patrons of the Chamber, those with the highest level of membership, and they support our lobbying activities through their contribution. It's not just what they do, but that's, I always think their contribution enables me to do the sort of lobbying and advocacy and policy work that we've done so much of since we've seen the whole COVID situation. In fact, Brexit and COVID combined have shown the real strength of the accredited chamber network and what we've been doing to support business, because when things are sort of relatively good and stable, the stuff that chambers of commerce do behind the scenes to support the business community isn't so obvious. So in some ways, it's done us, I wouldn't say some good, but you can see the work that we've been doing lobbying for local businesses. At the moment, British Chambers are very concerned about a couple of main points. Obviously, coronavirus, which I'll come on to in a moment, but also Brexit. Here we are with just tens of days to go until the end of the transition period, and government still hasn't organised a deal with our European colleagues. And that is exceptionally difficult. And rather disingenuously, some government ministers are blaming business and saying, we've had a year to prepare. Well, the transition period was to have a year to prepare, but it was to have a year to prepare for what? We don't know what we were preparing for. We don't know what processes and systems need to be in place. We don't know what documentation needs to be in place. So there's a lot of work to do between now and any sort of orderly Brexit. So whilst we're still pushing for a deal, and government says there will be no delay to the end of the transition period, we are hoping there'll be some sort of phased implementation of whatever is agreed or not agreed, because otherwise we're really going to be quite stuck. Away from Brexit, there's obviously coronavirus, and business at the moment is very much in need of financial support, and that's partly why we're holding this event. And we will also, of course, be campaigning for support for business. And around the network, and I sit on a chief executives call twice a week with all the chief executives around the country, they are saying that the recapitalisation of business is going to be tremendously important. And so no doubt Tim will touch on that when he talks to us in a bit. We wrote to the Prime Minister, I don't know if any of you saw the Sunday Times, but British Chambers of Commerce, we've all added our signature to a letter to the Prime Minister asking for 5 key tests when considering any restrictions. And what we're saying is that no amount of financial compensation will make up for a lockdown. For a functioning economy is better than any lockdown, no matter how much financial support there is. But what we're saying is where businesses can operate in a COVID secure way, and businesses spent a lot of time and money in getting themselves COVID secure, we should be allowed to do so. Because if you're COVID secure, what risk is there? The risks to the economy are huge. The risks to people's financial health, but their personal health and well-being as well are massive. And in the letter to the Prime Minister, we've asked for 5 key tests to be applied before any restrictions are put in place. And the first is, are those restrictions evidence-based and targeted effectively, or are they just a sort of knee-jerk reaction? The second test is, are the restrictions clear as to what is required, and has business got time to prepare for that? Just a little side story, that one of the chamber members from one of the other counties has a ceramics business, and they have kilns that take a month to cool down and a month to power back up again. So saying, oh, we just shut down for a week or two is just ridiculous. They don't understand supply chain. They don't understand how long it takes to get a business operating up and running. The third test is, will the support provided to those businesses in restricted areas be commensurate with the impact on those businesses? It seems that the support packages are getting less generous, and yet the timescale is getting longer. The argument should actually be the other way around, that the initial support didn't need to be quite as generous, but now as time goes on and cash reserves are depleted, the support packages should be considerably more generous. The fourth test is, will any time of restriction be used to improve the test, trace and isolate program, which in this country is woefully inadequate. And not only is it woefully inadequate, but we have no compliance with it. And one of the reasons we don't have compliance with any sort of isolation regime is because there's a lack of faith in the testing, and that there is no practical support. So if you are a business that is a one-person band, or you have a small business where not doing business is just unfeasible, then you have very little motivation to comply with any isolation. Whereas in Austria, where they have very, very generous packages for individuals who cannot work from home and have to isolate, they have a 98% compliance rate with any isolation. And the final test of those 5 tests is, is there a clear process for increasing or decreasing restrictions? Going blindly into restrictions is not helpful to business. We need to know, what is the process for ramping up a restriction? What is the process for ramping it down? And on top of those 5 tests, generally, we are talking to government about an exit strategy from this. We cannot go on for the next year or two just going in and out of restrictions. There has to be a point we come to where we say enough's enough. So that's that. I said I'd mention BCC Southwest, so that's British Chambers of Commerce Southwest, which I chair, which is the county chambers of Cornwall, Devon, Dorset, Somerset and Business West. And all I want to say on that at the moment is that we are campaigning very hard to get behind the Great Southwest Initiative and to get the proportionate level of investment that this region deserves and so much needs, largely around infrastructure, both digital and physical, but also around skills. And we want to make sure that the message is going out loud and clear that actually the Southwest is a great place to do business, and you don't have to be on a crowded commuter train for 2 hours a day. Come to the Southwest, set up your business here. The infrastructure is largely great, especially on the main digital infrastructure, really, really super fast broadband in areas of the Southwest. And when you finish work, 10 minutes later, you can be on the beach or on the moors. And I think business is starting to see that, and certainly the commercial agents and estate agents are saying they're seeing massively increased inquiries from out of region, where they see what a wonderful place to live and work, where we're not so heavily populated, and therefore the levels of infection are lower. Anyway, I said I'd just give a few minutes, and I've overrun already, so I can't really criticize any of the other speakers who now do that. But without further ado, I will hand over to Christina Wadlow, who's a UK Director, Head of Partnerships at Western Union Business. And excuse me. And Christina's going to us an update on the market and currencies. So Christina.
Thank you. Hello, everyone. I'll keep it short and sweet. I don't know. Can you see the first slide? I'm not. Hang on a second. Am I sharing or? There she is. Excellent. So very short, and if anyone's got any questions throughout this, please do chip in. I just thought I would take this opportunity to run through, with so much global activity, we're clearly having a significant impact on the currency markets. So I just thought I'd take 5 minutes out to talk about some of the key economic influences. But if you are trading internationally, I would strongly encourage you to get in touch. And if you've got any questions, or if you need some help to mitigate some of the effects of currency volatility, just give us a shout, because we can talk about your own specific needs. If we can jump through a couple of slides, I think I've already jumped onto myself, but thank you, and one more. So this slide here is that as we look at the week ahead, some of the key focuses for the markets. So sterling is currently trading at around the 110 against the euro mark. It's currently holding its key levels despite Brexit negotiations that were just mentioned, and they're going badly. You know, like many of us, Michel Barnier has moved his in-person meetings to Zoom. So you know, he was supposed to be over here to talk about this in person, but he's doing it over Zoom now. But Boris is, you know, urging firms to prepare for a no-deal Brexit. You know, I think people are expecting this could be a possibility. Some economists are suggesting as a 60% of a no deal, but frankly, as we know, the market information around this is hugely speculative. And in actual fact, the British pound started the new week trading higher against the euro, the dollar, and most other currency pairs. And that's kind of indicative of the fact that the foreign exchange market is not fully buying into the Prime Minister's threat to walk away from talks, and that actually reaching a deal over the course of the coming weeks remains the hopeful and likely potential outcome. What we do know is that whatever the outcome is, we're likely to break out of our current trading ranges. So sterling is likely to show significant strength if we can see us coming away with a deal, or we're likely to plummet, perhaps not back to parity, but certainly to the low, you know, around 105 against the euro if we don't get a deal. So you can see the speculation purely around Brexit, not talking about coronavirus yet, is having a significant impact on the currency markets. When we look slightly wider afield, so looking at the week ahead, we know that in China, gross domestic product is lower than it's expected. It's come out slightly lower, but it's still growing. So we're seeing China's GDP at 2.7%. So that's a 2.7% growth year on year. Might feel like it's far away, but if China's doing well, that implies that the rest of the world is starting to import and is starting to get back into the manufacturing and using the Chinese supply chains. Particularly relevant for the Australian dollar as well. Australia and China are so intrinsically linked. Australia digs it up, sends it over to China, and they make it into something for the rest of us to take. I couldn't not talk about the US election. How could I? In fact, I think if we nip onto the next slide, that might be about the election. Yeah, here we go. When we look at elections historically we know that when an election outcome is contested, as we saw here in 2000 with George Bush and Al Gore, both the stock markets and the currency markets take a hit. And I think it's not unexpected to think that Trump is potentially going to contest the outcome of the election. He's actually already said that if he doesn't win, he's going to contest it. So we kind of know that that's a likely outcome. But what we do know that is if he does contest it, we can expect the dollar and stocks to plummet, albeit for a short while. If Biden wins, we can expect the US dollar to plummet for a short time, unless Trump doesn't contest what's happening. So if we move on to the next slide, and we can cover this in more detail, but I'm conscious of time. There's so many different scenarios, and the US elections have such a huge impact on the rest of the global economy. There's a couple of scenarios here, and I won't go into them into too much detail, but typically a new president follows by an increase in dollar strength. So typically what happens is the new president comes in, you will see a little bump up in the currency strength. But Biden's got quite strong political policies. I'm assuming Biden's getting in, but I mean, from a Western Union perspective, we're very, very non-committal on what's happening. But for the sake of time and the sake of this, typically a new president is followed by an increase in dollar strength, but Biden's got strong policies on taxing tech firms and encouraging green businesses. So tech firms at the moment are having a great time over in the US with smaller tax implications for them. What we may see is a twist in the economy. So we'll see different areas within the US doing particularly well. You'll also see that if Biden gets in, we'll potentially see the safe haven, the US dollar return as a safe haven currency. So again, Biden comes in, we're expecting the dollar to strengthen a little bit. Moving on to the next slide, getting out the crystal ball. This scenario planner comes with a strong disclaimer that it doesn't constitute advice and I don't have a crystal ball. What this chart is actually created with our partners at Oxford Economics, and they're looking at potential likely outcomes of currency. This one's sterling dollar. If you wanted it on sterling euro, let me know, I can send it over to you, no problems. What we're seeing is it's a huge range. So sterling US dollar is in the low to mid 30s at the moment, 130. So we're seeing it trading at around 133 at the moment. What you can potentially see with the introduction of a vaccine, so that's going to be key to global trade, stability in the US, so whatever happens, they're going to have a new president in. Hopefully there'll be a bit more stability over there. And the outcomes of Brexit uncertainty. So it's the uncertainty that causes issues within the market. So, you know, within the next very short period, we are going to know what's going to be happening one way or another. We may well see rates climb higher. Personally, I think the 148 as listed on this chart seems very high in the next 12 months. However, if we can see that the impact of what happens in a global situation has an impact on currency markets, you can see some outcomes here. The key message, and this kind of leads me to wrap up, I'm sort of, again, conscious of time, I'm very happy to take some questions. The key message is if you're trading internationally, you should speak to somebody to ensure you're getting, yes, fair pricing, but most importantly, that you're working with someone to help you limit your exposure to currency volatility. And there's lots of things that you can do by speaking to a broker to make sure you're getting fair rates and managing your payments. So you're not paying exorbitant fees and you're making sure you're getting well looked after and protecting yourself from currency volatility without having a negative impact on your cash flow, which I think Tim is going to probably come and talk about in a minute. I've slightly rattled through that, but has anybody got any questions about, we can move on to the final slide. Has anybody got any questions about what's going on in the currency markets or about Western Union?
Can I ask, Christina, what practical things can you do in terms of hedging or protecting yourself? How do you do it?
Yeah, sure. Again, it depends on each business's requirement, each business's circumstances. But let's take an example of a manufacturing business. So somebody who is importing £100,000 worth of widgets from China every month, or $100,000 worth of widgets from China every month. As we know, the rates are incredibly volatile. But you can use things like forward contracts to fix today's exchange rate for a future date, and you can actually fix that rate for up to 2 years in advance. What that does is it means that regardless of what happens with the currency market, you know exactly what your budgeted currency rate is going to be. And the benefit is you don't have to pay for it until you actually want the money. So you fix today's exchange rate, but you pay for it in 6 months' time when you actually need to pay for your widgets, for example. There are lots of other tools available to you as well. One of the things I'd say is, unregulated products such as a forward contract doesn't cost you anything. So there's no charge for doing it. The money's made in the difference between where it's bought and sold. So you'll see straight away by phoning up, this is what most people do, they'll phone up their bank or their incumbent provider and say, right, what exchange rate can I get for this right now? And then they'll come away and they'll speak to us and they'll find out what rate they can get with us. You're going to go with whoever's going to save you the most amount of money and offer you the protection against future currency volatility. Does that answer that?
Makes sense. Yeah. I like the bit where you don't have to pay now. Happy days.
Well, yeah. I think it's a cash flow situation. Yeah. That just to put the terms and conditions into that, it's dependent on some checks.
Okay, so thank you for that. Any questions for Christina at this point, or we can always come back at the end when we do a roundup Q&A? Nope. Okay, no hands up. I don't see anyone speaking. So, so without further ado, I'll hand over to Tim Jones, and Tim will provide us an update. And Olivia's sharing the screen now. Tim.
Thank you very much. So my name's Tim from Start Point Finance. We're one of those businesses that in 2011 moved down to South Devon from Manchester, where I established the business in 2007. And we now operate in the Southwest, so Bristol, Plymouth and sunny Kingsbridge. There's 9 of us, and we are working capital finance brokers. So we're sourcing funding from a wide range of banks. So we do deal with the high street bank, particularly, I guess the biggest is Lloyds and NatWest, our biggest relationship with. And what's happened is there's a lot of talk about COVID accelerating things. Well, COVID for me has really accelerated the understanding of availability of funding from alternative sources. So most businesses have got an affinity to a high street bank, like football team. So it tends to be the bank that their dad or their mum took them to when they were 18. And a lot of people have stayed with that bank, both personally and from a business point of view. And in many ways, naively assume that the bank is going to always look after them through their lives. Whereas the reality is the bank, there's 2 facts. The bank sees it as a commercial transaction is the first thing. And the second thing is that business banking has changed. So there aren't that many businesses in the Southwest who have got a personal bank manager, who've got the ability to ring up the bank manager they know really well, knows them really well, and can make decisions. So that change is accelerated, and frankly, it's going to accelerate. So we do deal with a lot of different products, but the one I want to specifically talk about is the Sybil's and bounce back loans. So you have the next slide, please, Olivia. So most business people understand that there are schemes supported by the government via the British Business Bank, and the bounce back scheme, which is up to £50,000, has been an incredible movement of billions of pounds worth of money. And that scheme allows you to borrow up to 25% of your 2019 turnover up to a maximum of £50,000. And you get the loan at 2.5%, no guarantees, pay it back over 5 years. You don't pay anything for a year, you pay no fees. An unbelievable offer. And it's distorted the market massively because it's pumped billions of pounds in at a really low interest rate that is being used in a variety of different ways. So some are using it as insurance. It's stuck in the deposit account, trying to get an interest return, but not really, or more likely in the current account, just put away against a rainy day. Some people have used it to reduce future interest payments. So they've used it to pay down existing finance facilities. And some people, frankly, have used it to buy things that are not going to do any good for the business, but maybe it's the car that they always fancied or whatever. So there is a certain amount of abuse. Although I do have to say that the media talk about all the fraud that is going on. It's really difficult to open a business bank account in the UK, and it has been for months and months and months. So how these people are opening business bank accounts, taking the £50,000 bounce back and disappearing, well, they can't disappear anyway because you've got to self-isolate for 2 weeks when you come back. But I'm not convinced that the fraud is at the level that they say it is. However, what has happened is the banks have encouraged businesses to go the bounce back loan route because that's a really easy thing for them to do. So there are lots and lots of business who have taken £50,000, even though they could qualify for more because their 25% of 2019 turnover is, their turnover is more than £200,000. And they took it in May or June. And what they don't realise is that they can actually convert into the next size loan up, which is the Sybil's loan, which is £50,000 and £1 upwards. So if we go to the next slide, please, Olivia. So there are 100 different funders offering SIBLs. So when I talk about the acceleration away from the high street, you can get a SIBLs back loan from all sorts of organisations. Some of them are quite well known. And one there, if you take Funding Circle has done nearly £900 million worth of SIBLs lending in about 8 weeks. So the acceleration through non-high street has been huge, and we are helping businesses convert out of a bounce back loan. So if you take a SIBLs loan, you've got to pay a bounce back. Although some lenders will do that for you, others are relying on you to do that once you've got the money in your bank account, which I think could produce some interesting results in the end. But the independents are looking at the SIBLs lending criteria differently to the high street. So even though it's the same government scheme, as it's underwritten then by the different underwriters of the different organisations who are all trying to write their element of the SIBLs advances, they will have different views on what they believe falls within the SIBLs loan criteria. And we have got loads of examples where we have found money for businesses where their high street lender has said no. 2 other independents have said no, but the 3rd independent has said yes, and they access the lending. So one of the things that I would say is, if you are, if you're a business or know a business that has been turned down on the SIBLs application, but they still need the money, then it is worth looking at an alternative. If we go to the next slide, please, Olivia, it will bring out some of the key points. Okay, so there was a massive rush to try and get the applications in before the end of September. And at that point, the high street had convinced the government that they needed more time to deal with the deluge of applications. So going back to this accelerated change into high street banking, most of the high street had lost an element of capability, commercial capability. So they were absolutely swamped, and I have real sympathy for them. There were loads and loads and loads and loads of applications they simply couldn't get to. So the British Business Bank agreed, or Rishi Sunak agreed, to extend the scheme to the end of November, which has taken a bit of pressure out of the system. But I tell you now, we're going to have the same pressure at the end of November, or a similar level of pressure, as people realise that the opportunity ends. And there will be a number of businesses that are waiting on a decision from their primary lender. And what I would recommend is, providing they get an application in before the end of November, and you're not limited to the number of applications, you could have another potential go at accessing up to 25% of your 2019 turnover, up to a maximum advance in this element of civil scheme of £5 million. So I would recommend getting an application in with another lender, either direct yourselves or a broker. You can, as I said, you're not limited to the number of applications you have. The SIBLs scheme is the same as the bounce back scheme. So you get 12 months interest paid by the government. And actually what a lot of people have been doing is, you could have a £50,000 bounce back loan. You could qualify for a £60,000 SIBLs loan, and you could start your interest-free periods again from October or November. So you actually could extend the amount of interest-free time you get by putting in a SIBLs application. If the advance is up to £250,000, then there are no director's guarantees. Depending on what independent lender you go to, there's a whole variety of approach then to guarantees beyond 250,000. So some lenders will want a guarantee based on the 20% that the government won't underwrite. Others will potentially look at debentures. But the civil scheme is actually around the interest only element and no guarantees sub 250. So there's all sorts of other security requirements depending on who you end up going with, which is where potentially a broker might add a bit of value because they'll know in advance what the individual lenders are looking for, depending on the credit profile of the client. You're limited to 25% of the 2019 turnover, but if your year end is June, and you've got your year-end numbers for June 19, but you then had a cracking second half of the year, you can actually produce calendar MI information to get your 25% based on your actual turnover in the calendar year to December 2019, based on management information only. If you settle your CBILS loan within 12 months, from taking it out, you do not pay a penny of interest, fees, anything at all. So there are businesses who are using it quite cannily and they see it as literally a 1 year interest-free slug of money that they will then use to potentially come out of invoice finance, for example, come out of invoice finance, try and trade yourself into a position where you don't need invoice finance. But if you do, you can just go back into it again, having saved a year's worth of fees. There are others looking at existing credit outstanding and doing a deal on early termination. So you could use it as a way to reduce your existing costs. The final thing that I guess I would say on this list is that if you've made a bank application, you will know that you've put in a series of projections and description around likely scenarios as you come out of the effects of COVID. Most of the independents don't need anything like that amount of information. So most of the applications we're putting through are don't have a financial projection, and some of them up to £100,000. It's simply done on a credit score based on your Delphi score and your personal details. So it is a little bit, I honestly try and do things as professional as I can, but sometimes you really do not know what answer you're going to get back. So we'll have 3 applications, we'll get 2 no's and 1 yes. Final slide, please, Olivia. So I'm just waving a flag that says this is an incredible opportunity to potentially get a injection of working capital at unbelievably low interest rates and tiny security. And we have managed to get CBILS advances for businesses that were loss-making in 2019. So the business in difficulty criteria, the government changed. So it kicked off with you couldn't advance to a business in difficulty, but they then changed the criteria part the way through. And if we can show either through management information from subsequent to 2019, why the business is turning around, we have managed to get advances for loss-making businesses. That's me. I'm happy to take any questions.
Well, I've actually had quite a few questions popping up in the chat to me. And thank you, Olivia, for sharing the website of Tim's organisation there. I'll start off with a couple of questions for Tim, seeing as you've just spoken. Is it best to use a broker or go directly? Does it cost more? Is it?
No, it doesn't cost you anything at all. So the fees are paid by the government, so it doesn't cost you any more. So I clearly come from Angle because I'm a broker, but we do know the inside track. We are able to contact the account managers and the lenders because sadly there's such a deluge of applications. If you ring Funding Circle, it rings out. Basically, they do not answer the phone. So you need to email the people within the organisation with the specific questions to sort things out. So you can do it direct. You can do it. And the other thing that I perhaps didn't mention was it isn't just loans. So you can do asset finance. You can do invoice finance using the CBILS scheme and have the benefits of the lack of security, basically, that you would have to give.
And do you think banks are less likely to give money out at this time or more likely, or is it better to wait?
No. So I've really got a load of sympathy for the banks, because I'm old enough, sadly, to have worked through. In fact, our business went through the 2008 crisis, where the banks had bet their shirt and their balance sheets were blown away. And what they've done since then is rebuild their balance sheets. So they are lending responsibly through their criteria, and they are, because they're on the hook for 20%, because it's 80% government guarantee in excess of £250,000. They are underwriting it as if they're on the hook. So they are interested in how you're going to pay it back. So you've got more chance of getting a Sybil's loan through now, i.e. before the end of November. After November, the bank's going to be underwriting on exactly the same criteria, which is, can you afford to pay it back? And if your business has had a downturn because of what's happening with the COVID environment, that is going to affect you proving that you can afford to pay it back. If you've got more loans because you've got a Sybil's or whatever, that is part of the indebtedness that the company will carry going forward. So we're going to go into a really, really difficult time for raising working capital. Really tough it's going to be.
Yeah, and I think there's a sense, isn't there, that come sort of March, April next year, there's going to be a bit of a cliff edge of issue with businesses' finances, in that they're going to have the first repayments of loans that were taken out at the start, that and rates due, a third winter, additional coronavirus restrictions. It seems like the perfect storm for business collapse. So you're saying recapitalize now? And
yeah, absolutely. And you can add VAT. You can add the VAT. If you've skipped that, you've got that VAT payment as well. What I'm saying is you can for no cost get 12 months of insurance, depending on your accounts in 2019, and there is some flexibility on those 19 accounts. We've had a load of deferral of insolvencies. HMRC weren't putting businesses under, so there's an inevitable catch up going to happen, and there are inevitably some businesses that they've taken a bounce back loan, which will allow them to kind of move on. But if they're fundamentally loss making, or not even, they can be profitable and not cash positive, then sadly it's going to be really difficult to get your bank to lend you, unsecured definitely, but secured may be difficult as well. So if you haven't got property, or you don't want to put your house on the line, you're going to struggle. So that will bring in other products. So there'll be confidential invoice finance, there'll be asset refinance, there will be other products, but it'll only suit certain companies. So what I'm saying is get the insurance now if you're lucky enough to qualify.
And I'd assume we caveat the responsible borrowing, so that only if you really can see a way out the other side. Because as you say, I think some people have borrowed with a view to delaying the inevitable when their business wasn't actually sustainable anyway.
I agree. Most people have got a plan, though. I don't think most people borrow because they know they're going to go under. They think that there is going to be a series of factors. But yeah, I mean, inevitably there's billions gone out into the market where arguably it's not going to get paid back.
No, I
agree. They had to do it quickly, and in many ways, sitting on bounce back, they did a fantastic job in sticking billions into the economy.
And the bounce back loan scheme, of course, was as a direct result of campaigning by British Chambers of Commerce.
Absolutely, and it was brilliant. But where it's been misused in my mind is that if your turnover is £1 million or £500,000, you could access more cash, but you were coerced down the bounce back route because it was easier. And actually, it will come down to maths as to whether that was enough.
Yeah,
a lot of people don't realise they can come out of the bounce back and go into a Sybil's loan, provided their turnover is greater than 200,000 within the calendar year.
It sounds like if you're thinking about it, Tim's your guy. Best give him a call and he'll talk you through it. Christina, there's a question for you popped up in the chat privately, and please caveat if you don't feel comfortable answering this. And I know it's not advice and everything, but one question for Christina is: what will happen to sterling when Brexit finally comes and we end the transition period? What do they think? Is it correct that we expect the value to drop massively?
Well, it depends on the outcome of it. So if whoever that is, I can circulate it via the chamber, or Phil, get in touch with me and I can send you this scenario plans for sterling against euro, US dollar, tell me what currency you want and I'll send it to you. The simple answer to it is, if we have a Brexit deal is arranged, it's likely that we're going to see sterling strength off the back of that, and it should be quite strong. So you should see it really quite robustly recover. If we have a no deal situation, we should see it drop quite significantly. If we look at COVID, for example, that's a global issue. Some places are dealing with it better than other places. But at the moment, everyone's basically in the same horror show wherever they are in the world. Brexit is, we need to get that deal. We need to get a deal sorted to ensure that the strength of the pound comes through, or have the certainty. Because I think the thing that all of us in business, the thing that really puts businesses in difficulty is not knowing. And I think you said it at the beginning, Stuart, you know, businesses are robust and the companies that we're working with are working so hard and doing so well. But if you don't know the rules and don't know what you're working to, what are you supposed to do? So it's the uncertainty that causes a lot of the issue.
Absolutely. They always say that businesses can deal with anything but uncertainty. Markets can deal with anything but uncertainty. Yeah. And if you certainly know what's going on, you can deal with it. There's a question in the chat, again, to me privately, but asking, is there anything available? I guess this is to you really, Tim. Is there anything available for new startup businesses? And before you answer, just say that I have a few months ago identified that startups are going to need support, that there's going to be actually an increase in the number of people wanting to start a business as they're either made redundant or they spent their furlough period thinking about how they'd like to do things for themselves. But there's no, there's lots of signposting. There's not a huge amount in terms of startup.
So there is a small government startup loan, but apart from that, it's really difficult to raise money for new start businesses. You can use products to access working capital for so asset finance, for example. So if you're starting a business and you need a van, then you'd use asset finance to fund the van. If you're doing business to business transactions and there's going to be a delay before you get paid, then you can use confidential invoice finance to drag capital into the business. Cash is absolute. It's always this good, but cash is king. So if you've got some seed capital to get the thing going, don't be buying kit with it, or you use it really sensibly. It's like people that have taken the bounce back loan and blown it on something stupid. You want to keep the cash. So startups are going to be difficult, and they have been for some time, and it's sort of, unless you've got some money that you've squirreled away, or you've got a redundancy or whatever, it will be tough, I'm afraid.
Yeah. I'm sorry, I know this is a sort of serious business event, but I've got to tell you the story about the chief superintendent who appeared on Crime Watch and asked what the gang that had stolen £100,000 had done with it. And he said that they'd spent it on drugs, alcohol and gambling, and they'd wasted the rest, which I thought was which was great. So any other questions from people around the room there?
I know that this isn't really for me, but I have got a question for you, Tim. I understand the civils side of things, and have had some involvement in that from a business perspective. What is in it for, why, if the government are paying the fees and there's no charge to the business, what's the benefit to Start Point Finance of providing these civils loans?
So we get part of the government fee that the government pay to one of these 100 accredited lenders, and it's how
no cost to the business, so never any
correct
cost.
Yeah, so nothing we do we charge a fee for. We're a success only business, so it's about finding the best solution for the client, and sometimes that's a combination solution. We get paid being successful, and if Aunt Mary comes up with the money, then happy days, because I genuinely believe in karma. You do the right things, you help people out, and what goes around comes around. So at the moment, I'm mainly working for the government, but I haven't got any of the thrills or the frills.
Good to know. Okay. Any other questions from anyone around the room? I'm not seeing any hands up. No one waving vigorously at my camera. Nothing coming in on the chat. Okay. So it looks like we might even get 10 minutes of our lives back. Oh my God. We might be able to do something productive with it. I don't know about you guys, but I find we're spending so much time on Zoom and Teams. You go home seeing little squares with faces in them, and I'm getting more and more. I never liked not meeting in person, but more and more I just relish when we're allowed to meet properly and get back into a room together. So without further ado, I'll wrap it up there. Thank you, Christina. Thank you, Tim. Thanks again to our sponsors and to our patrons. And run and save yourselves. And I look forward to seeing you at the next event.